Good morning. Happy Sunday to everybody. This is Mornings with Michael, brought to you for informational and educational purposes only. We'll take a look at the week that was, some of the geopolitical news that could affect our money, and some of the winning stocks, and a little more education this week on past markets and what could possibly be moving ahead. Let me share my screen here. Here's our presentation. I'll have a break once we get to the top stocks, and we'll take a look at charts from this area. As we can see, Monday really ushered in a retreat in the leaders. Microsoft, Apple, NVIDIA, Broadcom, Google, Facebook. These two areas had been really leading the market, or well as this area was really retreating, which had been leading the market for most of 2022. And then we get over to Thursday and then into Friday. This is Friday's heat map. Microsoft, Apple, these guys resume their move. Google, Facebook popped back up. The bright green is anything over 2%. And then we saw Tesla go up over 6%. And energy popped up. And so pretty much most areas of the market were up. So this is the chart of what an annuity looks like. I've been talking for a while. If you want to avoid the volatility, there's no promise that the markets are going to go up. When you buy an annuity, it's like a stair step. Once it goes up the stairs, it doesn't come back down the stairs. It goes over here, up, up. The index's average is 7.5%. Annuity average growth is 12%. And my wife bought one that is going up 7% for the first 10 years. Doesn't go down, and bought an option for the next 10 years. So it has 20 years of guaranteed 7% annual growth with no retreat in the annuity. I think for a lot of people, this really makes sense. Big picture, Investors Business Daily's big picture. ETFs watching S&P 500, the QQQ. We're going to look at gold, definitely. There's the New York Stock Exchange Technology Index without the financials. We'll look at the financials, and then we'll look at the dollar index in a couple of different areas in our presentation. So here's the dollar index. During most of the retreat, you can see as the dollar was the strongest feature in the market. If you had invested in the dollar, you would have been very happily surprised. Well, now the dollar is retreating quite a bit, and we'll take a look at gold. Gold is going back up. Had a little retreat here when the dollar was so strong. And now the dollar is pulling back. It's been rising, had a little bit of consolidation, and now is broken out to highs over here. A lot of people are feeling that this is going to go up to the $200 or $2,000 an ounce level for gold. Interest rates on bonds, bond prices had retreated. Usually when stocks are down, bond prices are your savior. Neither of those worked in your favor this time around. Bond prices retreated as interest rates increase. And this is what's having a big time problem for the banks, is interest rates increase, and they have bonds that have lost so much value, and they had to sell them off in a fire sale, and they've lost billions and billions of dollars. So this is our interest rates through the financial crisis now. Interest rates are dropping. So in a lot of ways, it looks like bonds are ready to go up in value as yields have come back. A lot of people have move money out of banks and put them into bonds. And all of this buying has shot up the price of bonds and retreated the yields on those bonds. So this is a look at the financials. Once the crisis started, they sort of pull back strength. Some people feel that this is the bottom here, while other people says this is just a start of the problem. So we'll have to continue to watch this chart, see where it goes from here. And now this is the New York Stock Exchange technology index with all financials removed from it. As we can see, it had a little bit of consolidation and now it's breaking out with all the other technology stocks. A follow-through day. What is a follow-through day? Follow-through day first needs a rally day, first day up after a downtrend. And you start counting that as day one, and then you wait for day 4 or later, an index price change greater or equal to 1.25% and volume higher than the prior day. It doesn't have to be above the average volume. So accompanied by strong breakouts in leading stocks. Is there merchandise to buy? Not every follow-through day works, but no bull market has ever started without one. So let's take a look here at our top stocks so far in 2023. Looks like Red Robin Gourmet Burgers was number 1. And then right after that, AI. This chart came out before their 16% rally on Friday. Duolingo, language learning site, new recent IPO. Air Test Systems has been leading the semiconductor stocks on holding. The shoe company, another IPO, which broke out on huge volume on its earnings. NVIDIA, and then we have some other semiconductors, ACLS, ALGM, Allegro Microsystems, and then networking, Peria Network, Advanced Micro Devices, and Samsara in the semiconductors. So that's kind of a look there. We'll stop our share here and just take a look at the charts of a couple of those. This is AI. Back in 2021, I had felt that this was going to be a huge winner, bought a option, and the stock prices just went down. So that was the big loser for me. Right before its earnings, I bought some more options, and luckily the earnings for me came out really strong, and the stock pulled back again. So I got out of the stock, and then I bought an option around 22 as it looked like it had hit bottom and hit my payday on Friday, so to speak. So I took off one of the options, and we'll just see if with all this news in AI, if the first to market status keeps this going moving forward. In the semiconductor area, Air Test Systems broke out back here. I believe it was around 211, 239. From 239, it went all the way to 40 before pulling back, and the earnings were up 45% last week, and this wasn't good enough for many investors, and it has sold off hard. Looks like about 18%, a little over 18% retreat. In the cosmetic area, Elf Beauty broke out 25.29, and now it's at 82. So that's at least a triple, if not a quadruple in the making. This is the local Oakland area, and they sell their beauty products in Target, among other places. And our last one is, we're going to take a look at Duolingo. Duolingo had an IPO base, broke out, And then we have the due diligence phase where professional money managers are looking under the covers and they're meeting with managers. So it had its consolidation back here. This is really the area that it kind of broke out, had a pullback. So this is a cup with a handle. And then it broke out on heavy volume on this week. And if you had bought over here in the buy period, this is the sell period. So pretty good money being made there. So I think I did not share my screen. So let me just quickly share the screen here. This is Duolingo, who we were just talking about. Here's AI. Air test systems. 18% pullback. And Elf Beauty. Here's where they had the breakout and the second stage breakout over here. High tight area, and it looks like it is broken out again. This could be the third stage base, third and stage bases and beyond carry considerable risk, much less chances of success. But we'll continue to watch that. Stop the share here and go back to our presentation. So this is our follow-through day on March 29th, 2023. We can see the higher volume here. Price and volume dictate everything. Just because we have a confirmed rally doesn't mean that a new bull market is underway. Could just be another rally. So we had a rally here. We had a rally here. We had a pullback. And how far this rally goes is anybody's question, because a lot of what we saw was people covering their shorts on Friday when they were betting the market was going to go down on another bad personal consumption report. And it beat, but it was a slight beat. So where we go from here is a big question. So we look back in history at another inflationary area, the Dow trading range from 1966 to 1982. We see that it was just in a range. This is what you call a nice butterfly pattern, I guess. Butterfly is an options trade when you're stuck in a trading range and you make money when it just stays in this trading range. So we'll just have to see if we're in the same area or if we're start of a new bull market. This is what the NASDAQ current trading ranges look like. Like I said, we did break above this 12,000. We'll see where it goes from here. Here's a look at the NASDAQ indicators. This is the December through January area where it peaked up here. On February 2nd, started its sell-off, and it's been in this kind of downward trading range where it just broke out on Friday. This is the triangular pattern. Got a little bit of a squeeze. This is where it popped up on Friday. We don't have Friday's numbers in here. We'll see if it can continue forward. The squeeze, like I said before, was due to a lot in short covering. Here we go, advanced decline line. It looks like it's hit bottom and it started coming back up, but it still hasn't gotten to this range. This is last August. If you've been watching this, you could see that it started to sell off, picked up to January to December, and once again we had another sell-off as it topped out here. Now there's concerns for S&P 500. Look at the trading range as we sold off. I believe this is back in August. Had a little bit of a rally here, had a big sell-off here, had a rally again, another big sell-off, another attempted rally, and each rally has become lower and lower as the trend moved down. David Ryan of Investors Business Daily had predicted, I believe over here, that we may be in the midst of a rally that goes to 420 to 430 area. So we'll just have to see if it can break out above the 411. But this is a concern. On the positive, take a look at this formation. This could possibly be a inverse head and shoulders. This being the head, this being the left shoulder, this being the right shoulder. This would be a bullish formation. We'll just have to continue to watch. But I do believe we're closer to the 7th inning of this bear market baseball game. We'll just have to continue to watch and see how indicators play out. Concerns for the S&P 500. This is Susquehanna, a fund. It says as of yesterday, this was last week on CNBC, Apple, Nvidia, Microsoft, Meta, Tesla, Amazon, Google, CRM, AMD have contributed to 160% of the S&P 500 gains on the year. So SPX would be negative without these stocks. Apple, Nvidia, and Microsoft alone have contributed 91%. And here's our concerns. Top 11 companies, percent of S&P 500 weighting is at 28.9, and we can just see what their gains, as most professional money managers have been hiding out in these big cap tech. So we'll take a little closer look under the cover. 11 companies: Apple, Microsoft, Amazon, Nvidia, 2 classes of Google or Alphabet, Berkshire Hathaway, Tesla, Meta Platforms, United Health Group, and then we got ExxonMobil. This is a chart of IWM, where it has all the financials in here. This is why we got the big sell-off in the small cap Russell index. Looks like we got a double bottom here and it bounced above the double bottom. We got a little bit of an engulfing candle here. There's a gap here that we think will fill and then have a pullback. Right now we see all the momentum is at its highest level here. We go on price and volume. Right now the volume has been high. A lot of short covering as well. So we'll just see the next couple of days. There's only a 4-day trading week next week, so there could be a potential for high volatility. Here's the QQQ, the NASDAQ. The NASDAQ really needs to break through this 320 area. We'll just see there's a gap where it gapped down on the market, see if it fills this gap and can continue higher, or if there'll be a slight pullback, and then we move higher on maybe a cup with handle formation. We got a cup here and a little handle formation. This shows the potential here. This is also in the cup with handle. We got a double bottom formation. Once it broke through here, it continued higher. Once again, volume is high. We got a bullish engulfing candle here. So we think it's going to go a little higher, but the momentum is at its highest point here. So this is, if these CCI and the stochastics start to bend as we get up here at the top, that's where we think we'll have a pullback. Here's a look at the VIX. As the S&P has rallied, the VIX has come down quite a bit. But then we look out just 2 months, and some of the highest options are on the price of 22 on the VIX, for moving up to 22. So that's between 21.96, right about in this area. Believe has a good chance to head up to 21.20. You can see that there's a handle forming here on the bottom of the commodity channel index, and the stochastics looks like it's starting to bend as well. If that's the case, the S&P will pull back. This is a very bullish candle, bullish engulfing candle on the S&P. You can see momentum is heading higher. The two things that really main focus are price and volume. Volume was high, so it tends to believe that this is going to go up further. Maybe it'll hit this resistance here before it starts to pull back. But it's come quite a bit. We got a lot of green candles in a row. Sometimes when there's an overabundance of green candles, we call that a stale green light. And we'll continue our watch there. In the geopolitical news, China increases its military budget by 7.1%. So there's preparedness for fears they will launch an invasion of Taiwan. China is shocked by the U.S. carrier, warns Chinese Navy not to mess in the South China Sea. But really, when it comes down to it, China doesn't have to fire a bullet all to win this war. They have a currency war going on with America, with all the treasury bills that they hold. That's a big card that they have in their court. Brazil and China strike a trade deal agreement to ditch the dollar. So we need to look further into the BRICS nations: Brazil, Russia, India, China, South America, and Saudi Arabia. If this really happens, this is really the end of the petrodollar. Our dollar will continue to decrease and our oil will continue to increase. Saudi Arabia is betting on increased Chinese oil demand as they build out their industrial complex. They're not worried at all about the Green New Deal. All they're worried about is growing their markets. Now, here's a patent that we should all take a look at. It should worry a lot of people. Ford patents a self-driving car that will take itself back to the showroom if finance payments are missed. Major changes are coming to the government. They're going to limit how you can access your money. Politicians never make a mistake. They always point their fingers in another direction. And that direction comes down to penalize us and our money. They don't like the fact that we're pulling money out of the banks and putting it in gold and cryptocurrencies and other places that we feel more secure in being able to handle it. So look for that as the next step to limit your access to your own money. And finally, this is a chart how to handle the news. We got all these negative things: inflation, high gas prices, utility bills, yield curve, interest rates, crime, war, bank failures, layoffs, recession fears. How do we handle all this? The charts will tell us everything. The price and volume of the charts will tell us if the market is climbing a wall of worry and they're not going to worry anymore, that the future is going to be brighter than it is in their present day. If volume is weak on rising charts, that is wedging, and that is not positive at all. So that's why price and volume are your key. So that's the end of our report for this week. Hope everybody has a great weekend, has a great start to their week. Keep positive energy going. I got a great new book I'm reading on rejection, and this is a great book as well, William O'Neill, How to Make Money in Stocks. So we'll keep you ahead here and keep looking at the market in the following week, and hope everybody has a great weekend, and always keep the faith.